make it like as utilitarian as possible for a lot of these TradFi shops to easily integrate without sacrificing, their compliance. Yeah, I mean, like being in the space for so long, and like the rest of the team, we're just more than used to like all the volatilities going on. Yeah, so I think this is one of the most exciting like alignment of stakeholders and like all the ecosystem participants, because they all came together and came up with this initiative for like INJ 3.0.
On Coinage with us today, we've got Injective Labs co-founder Eric Chen joining the show. Eric, thanks so much, man. Good to see you.
So much for having me.
Yeah, it's an interesting year, honestly, for a lot of projects in Web3. I guess to start, maybe for those who don't entirely know or haven't wrapped their head around what Injective is all about, maybe we can start there before we get into some of the big announcements that you guys have been working on and initiatives that have, I think, a lot of people who have focused on this Web3 financial attempt to make things better, quicker, faster. We'll get into all that. But first, Eric, why don't you just describe what Injective's all about?
Yeah, so Injective is a sector-specific L1 blockchain built for finance. It's an open, interoperable layer 1 blockchain that powers the next generation of DeFi applications like decentralized spot and derivatives exchanges, prediction markets, lending protocols, and much, much more. It's built on top of Cosmos SDK, utilizes Tendermint-based proof of stake consensus mechanism, and also, with the optimizations and the native mechanisms, allows for lightning fast performance of 20,000 plus TPS.
Okay, so there's a lot going on there. I want to dig into all of what that technology has enabled, at least in terms of how you've added to it this year. One of the recent announcements, which I pulled up here, is by Toro, basically perpetual futures on Injective. And it seems like, a lot of the trading elements are there for kind of your guys' bread and butter. How big of an addition is that in adding by Toro onto Injective?
It's very, very exciting for us, because one of the things that we've been building as part of Injective Labs has been, like the Helix app, and Helix has been, been the flagship product for the entire Injective ecosystem, supporting spot and derivatives exchange. And one thing that we kept looking for, one thing that we kept, begging the ecosystem to do, is to build like a better and superior or more advanced Helix app that, like we will never be able to compete against or like beat. And this is, one of those examples where like there's a very, very exciting team building a very, very exciting product that are, kind of like marrying like all the liquidity from Injective and all their deployed ecosystem all together to kind of realize the vision for the exchange application of ecosystem within Injective.
Yeah, I ask every kind of person at the helm of these chains kind of what the metrics are that matter most in terms of what you watch. I feel like total value locked is one that is talked about a lot, but can be gamed a lot. So I don't know how important that is to you when you talk about a lot of these initiatives, maybe bringing dollars, however they may be represented, onto Injective. Looking at the chart now in terms of total value locked, ups and downs. I mean, what do you look at as metrics that matter the most to tracking your guys' progress?
Yeah. So for our case, I think volume is the most accurate metric to keep track of all the financial activities going on within the Injective ecosystem. Mainly because for Injective's case, the order book mechanism kind of reigns supreme within the ecosystem. So this means that for any type of TVL, it would have to be tracked as, like the specific order that are actually being placed on top of the order book, rather than like exchange deposits or, those AMM liquidities. So typically, for our case, a successful metric, interestingly, one of those KPIs is actually the volume to TVL metric, which means that, to support the, organic volume within the ecosystem, the less TVL being used is typically like a better sign. It means that, the capital are being efficiently used and they're being like efficiently allocated because of the order book infrastructure. And yeah, like overall, I think general transaction count, address count, and also like the ecosystem volume is also like very, very exciting metrics that we keep track of. And of course, it all like ends up in the auction pool, which is the true value accrual for the network itself.
Yeah, it's interesting to think about value accrual. I keep going back to this same chart from Sonia Kim. We've been chatting with project founders for a while and kind of looking at, I guess, usage of the actual network and fee growth. And, if people are using your network and fees are going up, things are good generally. Injective, one of the examples listed here, in terms of project that's doing well in that regard. And I feel like, as much as you talk about all of these other things that people could be building on Injective, there's all these real world asset kind of focused attempts now as people look ahead, not just kind of traditional trading or what we've seen in TradFi, but now the idea of like tokenizing real world assets. I'm curious to get your take on maybe how much of a driver that could be in building on what success you've seen, and kind of what your estimates are for how big that could be.
Yeah, I think it's one of those very, very exciting, like, long-term investments that you make. You plan to see, like, years ahead, and you see it pay out and grow into, like, a forest, like, 5 or 10 years down the road. And the same case goes for, like, RWA or any type of these institutionalized utility-driven asset class, because you would kind of, like, spend a lot of time, and investment and resources into working with all these institutions, establishing a rail, kind of doing these trial runs with different types of product offering and different types of, kind of like yield bearing or permission token issuance, et cetera. And certainly from like a pure metrics perspective, it'll probably like pale in comparison with like meme coins and stuff like that. But really, what this paved the way for is like years down the road, when the entire space is reaching a high maturity stage, and for the overall blockchain ecosystem to reach the main stage, these rails are going to be critical in like catapulting like the ecosystem like Injective into like the next $1 trillion class industry.
How do you kind of, I mean, it's been interesting to watch different chains and their kind of BD efforts around that. Because it seems like, to do it with someone who's crypto native, or to have traders use tools that have been built on an Injective, it's kind of different sell than going to maybe some of the TradFi giants and say, look, you should probably build what you want to build on our chain, especially when it looks like JP Morgan's kind of building some of the stuff on their own chain now. I mean, how hard is it? How difficult is it as someone who's attached to a project like this to really sell TradFi or maybe Web2 people on the idea of why this tech is better than going their own route?
I think if you want to do it the right way, it's extremely difficult, mainly because of the mismatch in the mechanism, and also, the way of doing things, and also the schema between like a blockchain interface versus like a TradFi interface, right? And oftentimes, when faced with that choice between doing it the easy way, which basically means that the minimal amount of issuance, not having to think about long-term utility, or like like a continuous synergy between the permissionless ecosystem for DeFi and also the permission one, you end up kind of being able to like launch a bunch of hard-hitting news and a lot of like very, very exciting kind of integrations and deployments at the surface, but kind of not see the light of day for like its eventual growth. And for our case, it's really different, because Injective being like a sector-specific blockchain for financial utility, a lot of the work is being done into kind of integrating and kind of evolving like the core stack, the ecosystem, and also the application layer towards making it as easy as possible, to make it like as utilitarian as possible for a lot of these TradFi shops to easily integrate without sacrificing, their compliance layer, their,
Mhm.
existing stack, and also like the usability of it. And that's why, order book plus, like the permissions module are such a powerful combination, because it allows for not only the issuance of assets to be done in a compliant manner, but also allows for, the out of box utility, and also out of box composability with the greater DeFi existing mindshare and also existing dApps to easily, integrate in a compliant way with all of these exciting like TradFi products.
Yeah, I think that's one thing that a lot of people in the DeFi space have been waiting for, is this idea of real world assets, and kind of how all these worlds blend together if you can get there in a permissionless way. I think that's still outstanding, a big question for what it's all going to look like. I want to go back to this chart though, because I realized I kind of glossed over it for people who hadn't seen it before. In terms of fee growth being larger than inflation, I suppose it's a good segue then to get into some recent changes at Injective when it comes to the tokenomics. 12.9% is an outdated piece of this chart, circulating supply inflation, because y'all announced in a recent release, an update, that inflation's going to be cut quite a bit, actually, if I'm not mistaken, closer to like maybe 4% or so. Um, I wonder kind of if you can walk through kind of why that's such a big deal for people to maybe pay attention to anytime you have an inflation rate coming down when it comes to tokenomics. And I think it's maybe one of the lower inflation rates now as far as the competitive set. Talk to me about that change and what people should know about it.
Yeah, so I think this is one of the most exciting like alignment of stakeholders and like all the ecosystem participants because they all came together and came up with this initiative for like INJ 3.0. And what's interesting about this is that like for the Cosmos SDK chains or a lot of chains, leveraging like the staking module within Cosmos, is that inflation is a bit of a static parameter. It means that like governance would have to change it at every single proposal or adjust it at every single proposal to reach like a equilibrium of like a singular like inflation target that's constant throughout time. And one of the greatest initiatives, or like one of the greatest excitement around the INJ 3.0 proposal is that all the stakeholders kind of aligned around like a programmatic kind of reduction of these inflation parameters for the next 5 to 10 years in order to kind of align the entire ecosystem and kind of show like a commitment towards like this is where the chain's going to evolve into, and with the auction mechanism, with the burn mechanism, this is why like the reduction of inflation is going to be like a kind of like a cornerstone for the entire future growth of the injective ecosystem. And yeah, like one of the most exciting things is that like it's going to be a gradual decrease in inflation, and eventually I think even reaching up to like 2 to 3% if all the metrics stays constant.
Yeah, when you say all the metrics stay constant, I guess there's a number of different factors to consider in terms of, tokenomics are always kind of quite tricky to pay attention to. But having all the other factors stay constant in terms of, I mean, you guys also in this blog post talked about the INJ token release schedule as well. When you kind of look at it, I guess, to drill down further on it, what's kind of the expectations, just generally speaking? And of course, we never offer on Coinage financial advice, but looking at kind of how you see it, uh, after you guys change this, or if we do see maybe 2% inflation, given what you know about what's coming with all the efforts that you put together and what we just talked about, I mean, how bullish are you in terms of what the team has stacked for the back half of the year?
Yeah, so for injectable lab case, it's not as much about kind of like the economics of things, or like typically we would do like analysis on the economic implications of things, but kind of stops there. For injective labs case, is about building all the modules, building all the core contributions, and also building up all the stacks and also applications that support the ecosystem. So obviously, recently there's been a very very exciting like Helix 2.0 launch, and then there's also a lot of upcoming like 2.0 launches as well for other products within the ecosystem, and also a very very exciting upgrade to the chain itself coming up. I think we're gonna keep that under wraps for now until the proposal. And yeah, so for metrics, I meant like the economic assumptions within staking, because typically like the APR rate for the staking comes from like the staking ratio of the like ecosystem. So this means that let's say like there's an optimal figure to hit, which is let's say like 60% or like 50% bonded ratio. And basically, at different like inflation metrics, the bonded ratio could fluctuate, and there's generally like a range where like the APR could fluctuate in between. And the metrics staying constant means that like those assumptions don't break, or like the specific ratio of things stays constant.
I think just backing up and looking at like kind of the market factors at play here, obviously it's been a pretty interesting year when it comes to alts. Looking at kind of how Injective has traded on the charts, kind of similar path for some of the other coins out there, down close to I think 50% on the year. And obviously, again, as Bitcoin's kind of been the top focus, it just seems like altcoins in general have kind of taken a back seat. That is, of course, less so when you kind of consider the rise of Athena. I saw you tweeting a little bit about Athena and how it stacks into what you guys are trying to do at Injective. Um, a lot of attention on that synthetic dollar. I'm kind of curious to get your take on how big of a factor the back half of the year when it comes to altcoins is. Maybe some of the attention again swings back into the rest of the key DeFi projects, and what you kind of see shaping up with that Athena kind of being mixed into all of this. Just your general thoughts in terms of macro, what you've seen this year, and kind of where the excitement in crypto could shift.
Yeah, I mean, like, being in this space for so long and, like the rest of the team, we're just more than used to, like, all the volatilities going on and, all the fluctuations. I think, it's about, like, time and time again or, like, year after year, like, the steady growth in terms of key metrics, and not necessarily just about, like, the short-term fluctuation in terms of valuation for, like, a specific sector or ecosystem, because, like, it's, usually type of, like, slowly and then very, very quickly type of deal. And then for Athena's case, I think those type of product primitives that kind of marries a bit of CFI, a bit of DeFi, or like kind of like blends or like merges the world of CFI, like product offering and activity with the like the DeFi access, or like a lot of the really really undeniable strength of DeFi is going to really really shine for the foreseeable like future. And this means that products like Athena and a lot of other products are trying to kind of like use DeFi as like a capital aggregation layer, or like a important mission critical like redemption or clearing infrastructure is going to reign supreme in the long term, because this basically allows for like a globalized capital access. And if you codify like the compliance layer in an on-chain manner, you can also allow for like a complete compliant issuance of assets, just like all the RWA movements that are going on, etc. And yeah, I think Athena is really like a moment in time that shows like a market validation that like there's going to be a lot of excitement around DeFi being this kind of capital discovery and capital aggregation layer.
Yeah, I think, I mean, it's obviously the fastest stablecoin to kind of break the $3 billion market cap level, quickest to do that. And I wonder too. I mean, a lot of people have been talking about kind of Bitcoin's muted moves. You talk about your experience, and obviously, I think you're extremely smart when it comes to markets and everything in crypto. Honestly, so I mean, when you look at kind of the way that Athena could potentially be, you know, running the roadmap for a lot of other projects looking to do the same basis trade, it seems like that's become hot right now, and could be, at least if you read the reporting, could be perhaps a reason why Bitcoin's price has been so muted. I wonder what that means for the actual like crypto market as a whole, if that is true in your eyes.
Yeah. So I think like one interesting fact about basis trading is that it does have like a saturation point. It's not like an infinitely scalable type of strategy. So like we're probably going to see like a point where like basis trading becomes pretty heavily saturated, given the amount of capital at play. And another interesting point, or like like my personal opinion is that like Athena isn't necessarily like a pure stable coin, or it's not it doesn't share like the full property of like all the stable coins out there with full redeemability and like like full like assumed capital backing. It is almost like a like a stable coin infrastructure, or like the mechanical framework of stablecoin being taken to like a very creative level, because essentially what Athena is like a kind of like a yield bearing product that are blended, or like that incorporates a lot of DeFi elements for tradability and like liquidity, where it kind of manifests as like a stable coin in the user end, because obviously there's like a Athena USD, there's interestingly also like the SUSDE, so it's almost like a product that allows for the crediting of like your subscription into like their basis trading product, the
Hmm.
staking that allows you to get the yield upon it, and then like the risk that comes from like staking USDE, etc. But also like the liquidity lockup requirement, or like the liquidity when it comes to like entering and exiting from like basis trading strategy, also means that doesn't have the full property or like the redeemability of a typical stablecoin.
For sure. I just wonder if like maybe some of that muted price behavior on the Bitcoin side, which often triggers altcoin season, if it does have a pressure to keep the price muted, or kind of in the sidestep trading, if that could potentially delay or maybe undercut some of the excitement around a repetition of altcoin season.
Theoretically, it's meant to be like a neutral market impact when it comes to basis trading. But when you overload like a strategy like that, it could have like unexpected or unintended impact to like the price, because historically, given like a lot of the inefficiencies within the industry itself, you would see like people would kind of like yield to or adhere to the dynamics within a specific perpetual markets
Hmm.
or on a specific platform to kind of use that to like speculate or anticipate like the spot trends. And oftentimes, in TradFi, people kind of like write that off or like have a much more like measured approach when it comes to evaluating the futures market against like the underlying. But I think like there's going to be a lot more kind of inertia coming from the fact that like like purpose having this type of property or it's sharing this type of signal that usually worked in the past, and now because of this rush of like basis trading like products, it might have created like confounding or like interesting like dynamics where like people kind of rely on perp markets as like a signal.
Yeah, yeah. I mean, I think we saw that a little bit in the last cycle with the Widowmaker trade and GBTC and everything else that happened. So it's always interesting to kind of watch new ways to play a very old trade. But aside from that, I mean, it's not just Athena that's also curious to watch. Obviously, another thing you were tweeting about recently was Iggy Azalea's mother token as well, now being kind of also on Helix in this idea of meme coins. You mentioned it. It's really not just TradFi, but also meme coins. If one of the metrics you're watching is volume, I could see why that's such a huge focus in kind of this cycle. What do you make of that, though, in terms of meme coins being so top of mind now? Good, bad for the space, and just in general, kind of the way that Injective looks at those.
Meme coin being like a like a microcosm of growth, and also like a microcosm as part of growth, or meme coin being like a kind of like a value pegged signaling of like community strength is generally like a very very strong type of, or it's always going to be there. It's always going to exist. Always going to be like a part of human culture in a sense, because we're not only seeing that in like crypto, right? We're seeing like secondary markets for specific memorabilia or a specific product being traded to like extreme extents, etc. And I think like people kind of typically like kind of factor that in when it comes to like those type of products that people treat it as like a like emotional factor. But like the same applies to meme coin, is just hyper financialized and being hyper reflexive of the general like human sentiment within the space, because of the liquidity and also the ease of tradability of these type of products, and also
Hmm.
obviously the fungibility also helps a lot. I think like meme coin is definitely like going to stick around, and it's going to be like a part of the industry. Obviously, like meme coin beyond like a certain scale starts creating a lot of concerns around rationality. It starts to create a lot of concerns around like viability, etc. But I think like the market will over time like reverberate into like the optimal like sizing.
When I guess if I'm trying to wrap my head around kind of the way you look at Injective, and I guess the proper way to describe it to our community as a community-owned Web3 media outlet, the idea of differentiation of blockchains is always interesting to maybe see. Okay, one of these is focused more on real-world assets. One of these is more focused on meme coins. It sounds like, I think, maybe would it be fair to say that kind of an Injective and what you guys are building, you're focused on more the experience of whatever people want to do, the plumbing, the infrastructure piece, kind of the way we open this interview, kind of what Injective's known for. Is that kind of really what you're focusing on in the back half of this year and forever to come?
Yeah, I'd say like Injective's mission at the end of the day, and like a one liner will be to create like a free and inclusive financial ecosystem through like a decentralization. So it's really about like building up all the rails, all the plumbing, and listening to the user, like yielding to what the user wants, and then making it happen for the users. It's not about taking an opinionated stance on like what the user should do, what the user should participate in, or what the user should like access. It's about making it possible, building up all the compliant framework to making it accessible in a compliant way, and most importantly, at the end of the day, it's about listening to user and like creating a product that like users want, instead of making assumptions or like being opinionated about like the users that you want to bring on.
I am going to ask you for an opinionated answer now as we wrap this all up, though, because every time we have CEOs, founders on like yourself to talk about their expectations and big bold claims. It's kind of what we like to pose is Eric Chen's big bold claim for the rest of 2024. What are you seeing shape up? What are things that are top of mind for you? Maybe things that people in our community should pay attention to. What do you have on your roadmap?
Yeah, so I
Doesn't
think
have
for
to be
injective
injective,
case,
by the way. It doesn't need to be
oh,
injective.
like
Could
like
be
like a
just general
general, like, big bold
crypto.
claim?
Yeah, that's right, baby.
Yeah, I think there's gonna be a lot of absurdism within the TradFi context around the crypto market and the industry. Like suddenly like Dogecoin ETF being heavily traded on like a worldwide stage, or like hyper financialization or over financialization of crypto product within the TradFi space just start really taking off. And this is kind of like anticipating for the next 2 years. Because we see a lot of these institutions, these guys, on the sideline, trying to figure out entry points, trying to figure out ways to like access this market, trying to figure out ways to like build up the rail and pipeline for like a global like TradFi consumption. And we're probably going to see like people like finding themselves jumping to like the first thing that's accessible, or like the first thing that's accessible to them in a compliant way, and it ends up being like almost like comedic for the crypto world.
I don't know. It's been interesting to watch. Obviously, the Bitcoin ETFs, now Ethereum. We saw 3IQ file yesterday for a Solana ETP, the first in North America. So yeah, I think that that's probably a fair bold claim to throw out there to wrap up. Eric Chen, I can't thank you enough for coming on, man. It's been fun to watch kind of what you guys are building over there at Injective, and always interested to learn a bit more. Thanks again for the time, man.
Yeah, appreciate it. Thanks so much for having me.
Yeah, super fun. We'll have to have you come back on as we learn a little bit more about what you guys are building. You were a little tight-lipped there. We'll have you back on. We can talk more about those projects in the future. But thanks again, man. Appreciate it.